Hello currency traders and welcome to the weekend wrap up of the currency markets for Saturday 17th of September 2011 and the outlook for the upcoming week. Okay, the first thing we are looking at is the S&P 500. If you watched last week's video, we were talking about how people were getting rather excited about the down move at the end of the previous week. People were always talking about these, um, new downside risks and possible, collapse, further collapse. Anyway, as we said, that we're still range bound, so staying with inside this range was the very high probability. And as you can see, the S&P 500, 5 green candles all week. Now, the inverse is going to happen. The bulls are out. Five bullish candles all week. Oh, it's a new bull trend. Blah 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 blah. No, we're still range bound here. Effectively going absolutely nowhere. Up and down, up and down. No trend. It's flat. So we're back up at the 50% fib from the move down, for the big move down from the highs at 1353 there. Now, what is this kind of mini rally based on? Well, next week, as you all are aware, I'm sure, we have the Fed interest rate meeting. Now, this is the Fed meeting that has been spoken about by Ben Bernanke when he was at Jackson Hole. This is the one that they have extended out to 2 days. They've talked about the range of options they have available for further stimulus and things like that. So perhaps this will be the time when we actually get, some sort of clarification on whether they will be providing stimulus or whether they won't. So what do we have? We have the option of yes, further stimulus, bullish for equity markets, bearish for the US dollar. No further stimulus, bearish for equity markets, bullish for the US dollar. Or a continuation of the rhetoric that we've been hearing all along. We are monitoring the situation carefully. We have a range of options open to us. Personally, I think this is the more likely scenario. I can't see him, making any bold statements about QE3 or anything like that. If he does, that would be fantastic. We might get some actual direction in these markets, but I'm not too sure about that. But anyway, markets aren't going to be going too far until that happens. And if we have it here I have the ticket, and you can see this is set to GMT time. We have 18:15 interest rate decision US dollar, FOMC statement US dollar. So here we have, his statement and hopefully a bit of intent of what they will be doing. Now, if you don't want to trade the indexes, the S&P 500, what's a currency pair that we can trade that perhaps might move inversely to the equity markets? Well, we have one here. Where is it? US dollar CAD. You can see when the equity markets had a strong move down, US dollar CAD had a strong move up. And since then, dollar CAD has remained range bound, just as the equity markets have. So perhaps this week, if we do get some sort of clarification from Mr. Bernanke, and the equity markets break to the upside, dollar CAD more than likely will break to the downside. And inversely, if Mr. Bernanke tells us that no, further stimulus is not required, or the usefulness of the stimulus has been expired, and equity markets slump, you could see a break to the upside here. At the moment, there's a nice range that could be played here. Switching to the majors, so the euro had a bit of a rally this week, up off its lows, especially early on in the week, came off a bit on Friday. So we had some talk about coordinated action by some big central banks. We had some talk about China buying Greek bonds and things like that. So provided a bit of a rally for the US dollar. How long will it last? Well, the European situation is not getting any better, is it? With Greek bonds, 1 year bonds up at, the last time I checked, 145% this week. So certainty of a default there for Greece. People can try and put it off for as long as they like, but as far as I'm concerned, it's a dead certainty. However, with the little rally that we saw in the euro, the same can't be said for cable, pound dollar. You can see after this aggressive move to the downside, all we had here was chop this week. Didn't go anywhere. No rally. And the strength in the euro possibly provided some sort of support for the pound. It's at this major swing low here. And to be honest, this weakness of the pound really quite surprised me. I didn't expect it to be so weak. But because it is so weak, I think there is the possibility of a bounce, particularly because of this aggressive move down. But because we've had this week of consolidation, the higher probability I think is further downside for the pound. Alright, moving across to dollar yen, and same with dollar yen. It's in a holding pattern. Any attempt to rally is quickly sold into, but then people don't really want to be pushing this down too low with the threat of intervention. I really wish the Bank of Japan would just get on with it and intervene in this currency. All of the rhetoric and talk is becoming quite tiresome. And finally, we have dollar Swiss, and it did come off a bit this week. So after the initial move up after the intervention, or the kind of peg, not really peg, but level set that the Swiss National Bank want to see the franc at against the euro, that is. So we have had some movement to the upside and some movement back to the downside since that day. I think this level here will probably be the one that gets defended, so it will be interesting to see. Personally, I'm not trading the Swiss pairs, the Swiss crosses at the moment. I'm not really trading the yen crosses at the moment either, due to the manipulation and the threat of the manipulation. As I've said a few times though, if this does get down towards these tsunami lows here, 76.30, I may be taking a speculative long. I have had orders in, I don't have them in at the moment. Other than that, I am playing the short-term charts at the moment. It's not really conducive, these markets, to swing trading at the moment. You get some good intraday moves, but the sudden reversals and the general chop is much more conducive to shorter-term trading. So good luck everyone. Remember, on Wednesday, the Fed announcement. It's the big news of the week. Please give us some clarification, give us some direction in the markets. It would be fantastic. And after Wednesday, we'll know whether we're going to continue with this choppiness, if we get some more ambiguity and not really any answers, or if we do get some answers, some sort of stimulus path that would boost the markets, the equity markets that is, or an indication that no, QE1 and QE2 haven't really worked, so they're going to be abandoning it. That might get us a final rinse out of these equity markets down to the downside. So good luck everyone, keep it in mind, and I'll see you all next weekend.